What's going on, all of my SoFi investors? It is that time of the night to get into a SoFi stock update. Tomorrow is the most important day so far of 2022, and we must talk about it. What is going to happen? Why do I think tomorrow is going to be a bullish day, but especially Thursday and Friday? We also did get some very bullish news out of Russia and Ukraine. If these two catalysts come together the same day or roughly the same time period, you could see a massive rally in the markets. I wouldn't hold my breath as far as Russia and Ukraine, but the markets, they really only care about the Fed when it comes down to it. So we are going to get into all of this information. The only thing that I ask is that you hit that like button and subscribe to the channel. Other than that, these videos are free 99, and we get into SoFi stock, obviously, but as well as that, the broad markets, because that is very important. I give you guys my thesis on what I think is going to happen, and I think the opinion here is very valuable, and you want to stay up to date with that. Hit the notification bell as well. Get yourself those free stocks, links down below in the description if you guys have not already, with Webull, Moomoo, and Public. Sign up for Moomoo right now. Deposit $1, get 3 free stocks, as well as an additional free share of NEO just for $1. It costs less than a Snickers bar. Hashtag not sponsored. Snickers, please sponsor me. I'm just playing. Let's get into this video. So first thing that I want to point out that is very important to acknowledge is that we simply had a green day today. Sounds crazy, right? If you don't pay attention to the stock, but this thing has been getting beaten into the ground. Down 4.66% on March 10th, March 11th down 9.14%, and March 14th down 7.25%. Now we've seen a 3% positive day. So by no means have we even come close to recovering what we have lost. Ever since we broke under $10, it has been pretty much a landslide down. And do you know what this tells me? Do you know what this tells me? That people are pricing in way too much hawkishness from the Fed. They are expecting the Fed to pull Volcker us and to raise rates 20,000 times. At least that's what it feels like. No, seriously, they're pricing in 7 rate hikes by the end of this year. Considering what is going on with Russia, their economy is toasted, completely done. China is on very weak stilts. They are losing a lot of money in their dealings with Russia because they have very close ties to Russia. They have a non-exclusive pact with them. I want to say military pact, but it's not really. It's a everything pact. They have basically an alliance going on. So China's being hit a lot and very hard. We know about the real estate crisis China is in. And if you guys are unaware of that, just to point this out, fun fact, Chinese real estate is on average 2.5 times more expensive than American real estate. Put that into context. You think our real estate's expensive? Go to China. It's absolutely crazy over there. So they're in really weak territory, in shallow waters, on weak stilts, for lack of a better word here. So they're not doing good. Russia's not doing good. Europe's not doing good. We have fears of not doing good as well. So you're likely to see the Fed not act as aggressively as the markets are pricing in. I know I've called this out a couple times here on this channel in the past couple of weeks, couple of days, but just think back to the past 2 years. The Fed was so worried about pushing us into a recession because of uncertainty around COVID, they waited to raise rates for so long. Now I would argue there's a lot more uncertainty to the broad economy than we have seen in the past 2 years. That's a fact, actually. Like, that's not even up for debate here. There's a lot more uncertainty now than we have seen in the past 2 years, but the markets are pricing in a much more hawkish Fed than we have seen in a very long time. Very, very long time. And people fail to realize that raising rates only affects inflation when it's a demand issue. Supply chains, geopolitical tensions, energy going up, commodities going up, that has nothing to do and will not be affected by the Fed raising rates. It will not kill that kind of inflation. So it's not really a demand problem we're seeing. It's not demand inflation at this point that's making these inflation numbers continue to go higher. It's global issue, and the Fed has no control over that. So to put us into a recession, to raise rates 7 times this year and guarantee a recession is not guaranteeing to affect inflation at all. That's where you will get stagflation, stagnant growth with high inflation. You will start hearing that word a lot. Stagflation. Keep that in mind. I will repeat. That is stagnating growth and high inflation. That's where the Fed basically can't do anything about inflation, and they're raising rates and they're killing growth. Not what you want to hear. Not what investors want to hear. So the Fed wants to avoid that at all costs. And I think they're going to. I think they're going to raise rates tomorrow, but I don't think they're going to set a very aggressive rate hike policy going ahead into the future. They're going to state there is a lot of uncertainties. They might even say what I'm saying right now. You might get a rehashed version of this tomorrow from Fed Jerome Powell. And long story short, they're going to be very accommodative. They're not going to kill the economy. So the markets, that's what they're pricing in, is the Fed killing the economy. It comes down to, really, do you think the Fed is going to raise rates 7 times this year when it's not really going to affect inflation anyways? Or do you think it could be 4 rate hikes? That would be much more bullish for the markets. At that point, you're talking about a rate by the end of the year in between 1 and 1.25%. Certainly would help inflation, hopefully not push us into a recession, but that's more along the lines of what I'm expecting. And the markets, they are reacting to a couple things today. First and foremost, they are reacting to, obviously, if we do take a look at some of the headlines that came out today, like this headline from a Ukrainian official in the negotiating process. He says, "We'll continue tomorrow, a very difficult and vicious negotiation process. There are fundamental contradictions, but there is certainly room for compromise. During the break, work in subgroups will be continued." And the markets are rallying probably for good reason. They're pricing in a little bit of a higher chance to see some kind of ceasefire or an end to this conflict. Now, I highly doubt both of these are going to happen. I think a temporary ceasefire might happen if talks start to get more serious, and they are going to be talking yet again tomorrow. And last time we seen a 12-hour ceasefire just for humanitarian quarters at those 4 or 5 big cities, you've seen a 3.5% positive day for the NASDAQ. That was the biggest one-day move for the NASDAQ since October of 2020. So I could only imagine what would happen if there was actually a peace agreement or a ceasefire for a day, for a couple days. I'm not going to speculate on how long that could possibly be, but the markets are pricing in a higher probability of that today, and they're also pricing in lower probability to see a NATO conflict, as that situation has not escalated. Russia has not used chemical weapons yet. They have not misfired and attacked a NATO country yet on accident. Nothing like that has happened. So a weird thing in the markets happened. And I say it's a weird thing. It's really not, but the markets get over things very quickly. So if you see bad news come out like yesterday, the markets fell a lot. Seen bad news yesterday, nothing really developed and got worse overnight or today. So the markets aren't reacting to what happened yesterday. The markets are reacting to what happened today. They could care less about what happened yesterday. And then really tomorrow they're going to be reacting to the Fed. And then the day after that, they're still going to be reacting to the Fed, but it's more of a reaction to a reaction. So long story short, without getting too carried away with that, the markets get over things very fast. So if we just keep seeing steps in the right direction to see this conflict wind down, you're going to see the markets go through a lot of these violent up days. Like we've seen today, the NASDAQ up about 3%, Russell 2000 down up 1.4%, S&P up 2.14%, Dow Jones even up almost 2%, and the VIX down 6%. Also, oil is going down as well, quite dramatically, down about 7, almost 8% for the day. So that is good to see those commodities go down. It helps to ease that possible burden of inflation that is inevitably going to be high the next CPI report we get. All of that bullish, all of that new for the day. So it gets priced in as a positive. Now tomorrow that could change, but I do think, like I just went over, the markets will be bullish after the Fed meeting, especially the banks and the finance sector. because, you know, SoFi is hit hard if the Fed raises rates. They are not really a direct bank necessarily. They do a lot of their, well, technically they are now, but they do a lot of direct lending. They're not really involved with like a JP Morgan or Goldman Sachs, where they're in a lot of different sectors of doing, you know, IPOs or doing behind the scenes work, making that revenue, which accounts for like 25% of banks' revenue, right? Stock market trading. SoFi doesn't really do that. So a lot of their business revolves around lending, and SoFi is somewhat handicapped right now due to the fact that Biden extended the student loan moratorium throughout the rest of 2022. So that is something you can look forward to. The longer it goes, I think the more demand you'll see to refinance student loans when it actually does expire. Who knows if it's going to expire at this point, but in all reality, eventually it will, and then you will see that be a big boost to SoFi's business. If SoFi can perform with their most legacy, you know, section of their business, their largest section of their business, handicapped, they can perform these kind of numbers that they are doing right now. I can only imagine what they're going to do in the next couple of years. Long story short, that's why I'm really bullish on SoFi right now. That's why I'm trying to buy as much SoFi as possible. But nevertheless, I think you are going to see a bullish move tomorrow. But that report comes out at 2 p.m. The summary of economic growth projections, as well as the Fed dot plot and the prepared statement from the Fed. The trading algorithms, they get it right at 2 p.m. We all get it at 2 p.m., but they scan through for keywords, and then you'll see a big move up or down or both sometimes. The markets can be really confused, go up and down, very volatile for that really from 2 to 2:30, and you're not going to get a really clear direction unless there is a clear direction in the prepared remarks, which there's usually not. Fed Jerome Powell, when he comes out at 2:30 and he answers questions for the press release and gives his official statement, that's when you really do see that confirmation move kick in. You'll see the markets continue to go in one direction or the other, whether it's to the downside or to the upside. But like I said, I think it is going to be to the upside. Now, let's get into the SoFi data, because I've mumbled on long enough about why I think this is going to be a bullish reaction for SoFi. The max pain is $10 by this Friday. That means the market makers, if you guys don't know, they take about 90% of the back end of calls and puts. So think about it like this. A retail investor like me or you, we're not always going to be selling calls or selling puts comparatively to the amount of people that are buying calls or puts. So that's where the market makers come in, provide that liquidity so you can always go in the options chain and buy or sell options. Doesn't mean you always get a good price for them, but they're always there to provide that liquidity. So if they take 90% of the back end, up to 90% of the back end of calls and puts, the max pain is where the most amount of options will expire worthless, and the market makers will make the most amount of money, and hedge funds as well. So they like to try to pin the stock around the max pain price. We see that time and time and again, and that is $10 by Friday. Would indicate a pretty big move to the upside. Again, I wouldn't hold your breath on that. It's not a telltale sign of what is definitely going to happen, but it's just another tool in your toolbox, like Fed Jerome Powell would say. That's a direct quote from Fed Jerome Powell. But as far as the Ortex data, you're looking at 18.99% short interest of free float, 136 million shares that are sold short. Cost to borrow max is also going up. It's at 14.13%. Utilization is at 100%. I've called this out in every single video. The utilization at 100% means nobody is willing to lend out stock. Institutions, hedge funds, not willing to lend out stock for 14%. That means they must think it's going to go higher than 14% here in the short-term future. So that is very bullish. The days cover is sitting at 3.06. Also, very bullish. And quite honestly, we've run out of sellers in SoFi stock. The short interest has ballooned ever since the price of the stock has continued to go down. Who's really selling SoFi stock right now? Let me know if you guys got a margin call, if you sold SoFi. Let me know if you have sold SoFi at all down below in the comment section. It looks like the buyers really ran out around $15, $14, and it's really been a lot of shorting that has been pushing us down. As far as the option activity, you see a positive order value of about 29% for the day, 10 orders totaling $1.36 million. It looks like this across the board, a lot of artificial shorting activity that is going on with a lot of high dollar amount orders that are coming through. It's not just SoFi, it's Apple, it's AMD, it's Nvidia. It's all stocks that are getting a lot of that artificial shorting activity for the day. Now, if we take a look at the technicals, we need to bounce back to about $10 per share. If we can break above that, the situation looks really good. That's going to be the max pain, and you will start to see somewhat of a gamma squeeze if that can happen. Now, the 20-day simple moving average is the real level of resistance. That is at $10.43 per share. So if we get above that, then you're going to be home sweet home, and it all comes down to the Fed. Unfortunately, nothing else is really going to dictate what we do from here. But considering we hit $7.74 per share yesterday, I just don't see us going under that unless the Fed really gives us a reason to sell off. We need some kind of new information that is very hawkish to sell off further. SoFi is already at an incredible discount. I see this stock at least 10 to 15xing here in the next 2 to 5 years, really closer to 4 or 5 years, and that's a hell of a return nevertheless. Now, as far as the RSI is concerned, we bounce right off of the extreme oversold level at $30 or $30. We're at 32.34, still well under that $50 I keep saying dollar, but 50 point neutral level on the RSI. So definitely looking like we have a lot of room to bounce there relative to selling off. The MACD is becoming more bearish as the stock has continued to fall. Like I explained earlier, just dramatic drops almost every single day in SoFi stock. You can see the spread is getting quite wide there. From all indications, it looks like we are more prone or primed to see a rally compared to a drop in SoFi stock. I continue to buy the stock. I do have some options in SoFi. I have the $10 calls for April 14th. 5 of them I bought at $32 a piece. So I'm up 15 bucks. About 10%. I plan to flip these out tomorrow if we're green and maybe keep some for the Fed meeting for free. I have bought 50 additional shares. I did that yesterday live in the video. Average cost $14.92 per share. I'm not scared at all. We are here to stay, down 45%, looking to keep averaging down. But I want to see what happens after the Fed meeting, because I look at it like this. Fed meeting is bullish. We're probably going to $10. It's going to be a big percentage move, but it's not going to be a big dollar move. If we fall, then we could fall to $7, $6, and I'm going to get a much better average down. So in my personal situation, it definitely makes sense to wait, but it's 10% of my portfolio right now. So a lot of conviction in this stock nonetheless. So that's going to be all for this video. That is what you guys need to know. Thank you guys for tuning in. Hit the like button, subscribe to the channel, turn on the notification bell if you guys have not already, and get yourself those free stocks. Links down below in the description. You guys enjoy the rest of your day, and I will see you in the next one.